Yo, I'm gonna cut the song short. Welcome to Carter's Corner Pocket, where I feel the rocket. Today, talking GameStop. Yeah, man, something's all going on over here with my mic. Not the mic. I know I can hear. I know I can talk right now, but my audio is not coming through my GameStop earbud. But it's cool because I'm not playing any videos today. Yo, Dope Cho, what's up? Jesse, what's up, yo? I see y'all. Congrats to the Commanders. My Bucks lost the game with poor secondary play. Absolutely, man. It was a good game, no doubt. Jaden Daniels just ice cold, you know. Like I don't know how he does it. I couldn't do it. But yeah, I think Detroit. If you go look at what Detroit's saying, um, they were chalking it up as a win, and that's the biggest mistake ever. We're the biggest underdog on the board, and you know how that goes, man. We're gonna come from behind. We're gonna whoop them. I think. You know, I'm always bullish on that. I was on Moran's stream. I was talking about Jaden Daniels. I was like, look, we got our playoff win. Like anything after this is gravy, right? But he misconstrued it. He was like, look at y'all already ready, already expecting a loss. That's not the case. No way, no how. You know. Um, Cool, Einstein. Yo, I see you pushing. What's up, Michael V? Yeah, so I probably have about 30 minutes right here. Because I have to take my daughter to basketball practice. She whooped the other team. The other team had her cousin on it. She felt bad about it, but it was like 41-5. So yeah, that lets you know they put in practice a lot of practice time and practice makes perfect, man. The only way you get good is by getting in the gym. I guess the only way I'll get good at this is by getting on YouTube, doing research, you know, going through the process. Thanks to GameStop, I'm doing all of this, you know. But yeah, she whooped her cousin. What's up, Amber? She whooped her cousin and her best friends from school, like on that team. So she feels good and she's boosted about it. But yeah. So let's get on with it, right? She's sweet though. Like she's like the other team, like her friends were like, they're like, you guys are gonna win. There's no way we're gonna lose. She's like, still, good luck to you guys. And that was like halftime, like 21-0. So yeah. But moving on, man. I was just looking at GameStop, like what's going down. I was listening to Marance's stream earlier. He was talking about he's privy to a little bit of information. He has people that talk to Ryan Cohen. That's cool. I love it. But in the meantime, I was reading some of Larry Cheng's tweets, and I was just thinking about Ryan Cohen's letter to the board of directors in November of 2020. So yeah, so in that letter, he addresses all the challenges that GameStop faces. He deeply assessed. I'm gonna go into it real quick. He deeply assessed. Well, before that, um, here you go. Some articles, right? GameStop and AMC plunge as Roaring Kitty revival fizzles. Like we really invest because of Roaring Kitty. I mean, he's cool and all, but you know, he's just a side character to this whole thing. We're the main character. Ryan Cohen is the main character. Roaring Kitty, I'm sure he's a cool guy. He'll probably hang out, chill with us, align with us, not even trying to be the main character. That's why he's just goofing around on his live stream. But let's get away from that. Here, too dangerous to touch, says investor about GameStop stock. The buzz around GameStop over the past few years has been far removed from the underlying business of the company. These it says it talks about up almost 100% over the past 12 months. A large chunk of these gains were due to aforementioned meme phenomenon in the first half of the year. Absolutely nothing to do with you know the fundamentals of the business, the 4.6 billion dollars in cash, which they try to act like it's a joke. They try to act like it's a joke. I'd love to see them raise that amount. I'd love to see them raise $1 billion. How about that? They can't do it. But they're over here clowning on Ryan Cohen, saying it's only the shareholders' money when he's the primary shareholder, the number one shareholder. It says GME's core business, the investor is not thrilled by what he sees. Um, yeah, declining revenues, you know that. Top line revenues declining, competitive pressures, ambiguous strategy casts doubt on GameStop's future viability, explains best. Um, all right, what I'm about to talk about, we'll get into it. Here you go. I don't know why this top part's highlighted. Let me zoom in on this. Um, it just highlighted it. Okay, it all went away. Here. Um, I'm just gonna start reading because I want to get this done. It's important to me, and probably you too. Y'all already know this letter, but GameStop. I'm gonna start right here where it's bolded. GameStop's leadership should immediately conduct a strategic review of the business and share a credible plan for seizing the tremendous opportunities in the rapidly growing gaming sector. Speaking of here, GameStop needs to evolve in a technology company that delights gamers and delivers exceptional digital experiences not remain a video game retailer that overprioritizes its brick and mortar footprint and stumbles around the online ecosystem. Um, there you go, right there. Technology company that delights gamers and delivers exceptional digital experiences. So in my mind, I mean, I think we're going through a transformation, but I don't think he's going to forget about gamers wherever we go. Maybe later down the road, like a decade from now, which we'll still be here. But right now, I mean, streaming digital experiences. I think it's the community events, and he's also just Ryan Cohen is a smart guy, smart businessman. He's adapted as time has gone on. Maybe he's seen like, okay, we can only go so far with video games. We're going to continue to expand on it, but we can only go so far. And in his mind, he doesn't think like a regular, ordinary person. He doesn't think like a closed box, like he's closed up in a box. Like the Tony De Niro's, like that can't understand what he's doing. Um, he thinks outside the box. He's constantly growing. He thinks on a whole nother level. Like he's a contrarian, and he's said it before, and that's why he's in here. And over here, he analyzes and says why he got into GameStop. And over here, digital experiences. That's an experience. And I'll just read the letter before I go all over the place. I don't even know why this is orange, but here you go. It's important to reiterate that we have devoted a significant amount of time analyzing GameStop's assets, balance sheet, corporate governance, opportunity set, and positioning within the sector. Our investment thesis was predicated upon few core conclusions. So this is exactly why he's telling you. And it's funny to me. Every time I read this letter, it's like, here's the entire plan. And we can, as time goes on, you can see, check, 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 how it unfolds. So I think it's always good to revisit this because this is the plan, you know? Maybe he's like, I've already put it out there. Just shut up, you know? I mean, like, I'm not saying another word. I've laid it out. The gaming industry experiencing explosive growth with the global gaming market expected to be 175 billion this year and reach 217 billion by 2023. So over here from Statista, okay, projected to reach 522 billion in 2025. Over here in 2024, it's estimated $455 billion. So even in his letter, he underestimated. Well, he got this source from Newzoo, so I'm going to look into that gaming report as well, see if they have any newer gaming reports, and then I'll kind of report back. But as far as I can see from the Statista reporting, what is it? 455 billion for 2024, and over here in 2023, 220 billion. So it seems like it's almost doubled. Even if you want to underestimate it, it's still a large growth opportunity for GameStop. GameStop has valuable assets, including a strong brand with large customer base and 55 million Power Up members. Okay, so with all of these extra Pokemon, the TCG, the PSA, trade-ins, all of that, we're getting new members. We're getting like twice the foot traffic. That cannot be underestimated. You're getting people in the store twice, and I'm sure that's by plan because maybe they could have had an arrangement where PSA could mail the stuff straight back to the customer. But we're having the customer come pick it up. They're back in the store buying more stuff, using their $5 coupon, taking advantage of the free shipping that pro members get. That's really the biggest thing. The pain point that's been taken away thanks to GameStop and Ryan Cohen and Nat Turner, all of that, the whole operation. Yeah, we have that pain point taken care of. We have new pro memberships. Like I read in my last live stream, throughout all the forums, Lorcana, Pokemon, whatever you want it, name it, currency. They all mention GameStop. They love going to GameStop. They hit up every GameStop. People are hitting up 5, 6 different GameStops. And that's a problem because they're overextended on their footprint, which he addresses over here. But despite losing substantial market share to forward-looking competitors, the company can still emerge as a market leader and ultimate destination for gamers if the board can set a credible strategy for capturing growth opportunities. As you can see, in my mind, my eyes, I see the company, as the company's closing stores, which he said in here they will do, or they should do. He recommended they would do. So it's not out of nowhere, even though every other report you see GameStop's closing, GameStop's closing. Down the street from me, not even down the street, but like close by, there's a Japanese place like opening up. GameStop was over there in that location. It closed like 3 years ago. And they said The article was Japanese hibachi place opens in the prior struggling GameStop location or something like that. Who cares? Why do you need to mention GameStop? Can't you just say this place is coming in this city, whatever, like you need to keep mentioning GameStop? But whatever, maybe that's not related. Maybe they just had nothing else to write. But all I see is everyone reporting GameStop's closing. And the general public, like we know because we do the research. The general public does not know. If you go into the forum, they're like, "I told you, GameStop's going to close. They're going out of business. There's no way, no how, But I mean, we know we're doing good. We know we're coming net income positive. Um, Here you go. He talks about a mindset, resources for GameStop, a plan, and being a dominant sector player. So he has the resources, the 4.6 billion dollars in cash. Um, and he has a plan. I know he has a plan. Obviously, he has a plan. But over here, technology is changing nearly every aspect of the gaming world, ranging from the way gamers shop to how they interact and compete with one another. This is why RC Ventures believes the successful and durable players of tomorrow will be a technology-first companies that specialize in gaming products, experiences, and services. So we're going to have the experiences and the services. We're going to be a technology-first company. He has stated it. You can see in the careers, like he's not playing around. What's going to happen is going to be big. It's going to be a transformation. Senior BI analyst. We have over here. This is just e-commerce product sourcing over here. Motion designer. That's scaling up marketing costs. Okay. Larry Cheng mentioned that in the phases. Senior manager infrastructure, lead software engineer, e-commerce product manager, lead full stack engineer, principal software engineer, senior mobile engineer, lead engineer, Cloudforce Commerce Cloud, Salesforce Commerce Cloud, full stack engineer Java, principal engineer Salesforce Commerce Cloud, senior network engineer, senior product designer. So the product designer, yeah, that's probably going to be the private label products that I was talking about in the last streams. But this is not a company without a plan, no doubt. Here you go. Let's move it along. Where we at? 6:52. All right, cool. Um, yeah, it said it's evident to us that GameStop currently lacks the mindset, resources, plan needed to become a dominant sector player. He uses the word like dominance, dominant, because that's where he thinks. He thinks number one. He does not think number two, like meltdowners. I'm not even trying to clown on people. Those people don't have the mindset, the capacity to think outside the box because they're closed down, probably shut down by the parents while they're little kids. Couldn't even break out of it and become their own person, have their own thoughts. Larry Cheng says it right here about due diligence. Maybe I close it here. Due diligence isn't asking management what they think about key issues and reiterating that as your diligence. That's glorified telephone tag. Due diligence is developing an independent view on key issues, seeing if it aligns with management's view and your investment thesis. Okay, so my investment thesis is whatever Ryan wants. No, I'm kidding. I did the research. I read the letter. We do all of that. So that's why we invest. We do our due diligence and we try to project where the company is going. I have no insights from GameStop, Ryan, nothing like that. I'm just trying to project where we're going, and he's stated it right here. Um, he just talks about the decline and what the current board at the time was lacking here, and he mentions stockholders multiple times. He mentions stockholders. He's very aware. I mean, him being the number one shareholder is just proving to us that he considers us. Um, it's not a private equity plant where only Adam Aaron's line in his pockets, his board members' pockets, all of that with shares, his children's pockets. GameStop's leadership must promptly pivot from a brick and mortar mindset to a technology driven vision. We have to take bold steps. He's talking about dominance, being bold, technological transformation, and he's also factoring in the gaming along with it. So cut excessive real estate costs, which we're doing right now, hire the right talent. That's what all the firings are coming for. It's probably a rotational wheel. We're looking for the right talent. You don't just find it right off the bat. But he's looking for the best. Whenever he tweets out job advertisements, he's asked for the best, and I mean, you know the deal. You know the deal. I don't need to explain it. The company's average here. There is no doubt in our minds that GameStop has the flexibility to evolve into a technology driven sector leader. The company's average lease duration is approximately 24 months. Now is the time to identify duplicative underperforming stores and plan to forego lease renewals, which we have been doing from after the 2 years after this letter was formed. We have started closing stores and now we ramped it up. Non-core operations in Europe and Australia. It's already been said, right? It wasn't a surprise when we shut down in Germany and Italy. I mean, this has been stated before by Ryan Cohen. It says, yeah, here you go. Sold in order to reduce losses and potentially generate cash. So, what do you think real estate prices are right now? Way up, skyrocketed. So, what do you think we're gonna get? Straight cash when we sell these things, you know? So yeah, it's just stated here. It's so clear. The people in the media have a full narrative to push. They're given their narrative. They're paid off. Um, Saying he has no plan, saying he's an idiot when clearly here is his plan and he's fully enacting it. Maybe the PSA gradings, maybe this Drip Shop Live, they're all extra revenue streams, but he's seen a niche market and he's attacked it full on, thoroughly. You heard Nat Turner when he said he was surprised with the way that Ryan Cohen has done all of his homework. He came to me and he was like, "Wow, this is amazing. Yeah, let's go ahead with this." You know. Um, He's just a thoroughly research, like he's a thorough person when he does his stuff. Taken together here in the day, where was that at? Okay, the Europe one when we closed Germany and Italy, right? In addition, near-term increases in cash flow stemming from this console cycle can also help finance the future, provide that capital is not misallocated to risky initiatives. Ryan Cohen does not take risky initiatives. He takes bold initiatives, but he's very prepared when he does his. So I believe fully that the NFT marketplace is not dead. That's part of the technology driven thing, company that he wants to be. It's put on hold. Trump is more geared towards crypto, so maybe it'll come back with that. Maybe that's the whole Trump MAGA thing that he was going on, which I don't care. I'm not hating on him for that at all. At all. I actually like Trump. So I think for myself, I don't call myself Democrat. I don't call myself Republican. I just see what I like, what sounds good to me, who I believe in. Like just reading the character, feeling the character out. No Tony De Niro, but just feeling the character out, how they come across, if they're authentic or what. And people have a problem with Trump, so that makes me kind of like him. That makes me kind of like him. Let's see. Where else are we at? Here he talks about not going the opposite direction, significantly upgrading e-commerce and providing a greater revenue capture across larger gaming catalogs, digital content and community experiences, online trade-ins, streaming services, and esports. So we still have to attack this online trade-ins. That would be awesome. That would be awesome. E-commerce online trade-ins. That would be awesome. Like, I don't know how that's going to happen. I was doing a little research. I saw a company in the UK has that, and it seems pretty successful. But maybe he'll be modeling after that. I don't know. But that's a cool initiative to tackle on community experiences, digital content and community experiences. So maybe he's talking about online experiences as well. Who knows? But it's just showing that he has a complete plan and he's thinking technologically forward with GameStop. He wants to be the leader, the number one dominance in the sector. Like no, like he doesn't want to leave room for maybe their number two. He wants to be number one. That's why we put our money behind him, right? That's why we support him every day. He seems like a cool cat. Let's see. Well, let's move on. GameStop's addressable challenges and clear opportunities. RC Ventures hopes this letter provides the board with a clear sense of GameStop's addressable challenges and clear opportunities. Clear opportunities. So that's his plan. In bold. In this spirit, we urge you to quickly provide stockholders with a credible and publicly available roadmap for cost containment, prioritizing profitable retail locations and geographic markets, and building the e-commerce ecosystem gamers deserve. Please be advised. Hold on, wait. Yeah, so the e-commerce ecosystem gamers deserve, and I would expect that includes the online trade-ins, but who knows if we're still going with that way. My daughter's favorite saying is like, just roll with it, you know? If things don't go your way, just roll with it. So I love saying that. It just helps me shrug stuff off. So maybe some of these things aren't working out. Maybe, like, I'm not saying he's wasting money on it. Just the thought process as time goes on, maybe just society or whatever, technology transformation doesn't go that route. Maybe he'll drop it and go on to another thing like the PSA, and substitute it. But whatever. We know we got a dude that will just roll with it. He'll try different things, think outside the box. He's not just going to sit back, chill, count his money because he gets paid $0. Please, I just highlighted the last because it's funny. I gotta move to the side because the camera's blocking it. 1 second. It says, please be advised that RC Ventures is not interested in receiving a lone seat on GameStop's 10-member board. It is not enticing to become an isolated stockholder, advocate on a board that has overlooked years of digital revenue opportunities and presided over massive value destruction without assuming full accountability. We want GameStop's leaders to do their jobs and implement a strategy for bringing the company into the 21st century. Sincerely, Ryan Cohen. Yeah. So that's that man, Ryan Cohen over there. Then you have Larry Cheng over here. Let me see the chat. Yo, Einstein, see you, man. So on point. Matt Haney, what's up? Bryce Acosta, you know what it is. Hey, Seuss. Yo, the 51st. D Outdoor family, what's going down, yo? Welcome over here. We're talking GameStop. GameStop and the leadership. Let's see. As you think of 2025, this is a recent tweet, January 14th. As you think of about 2025, planning for your business, be careful of letting the pursuit of 10 relevant, positive, incremental initiatives crowd the space to pursue one big, transformative initiative. The latter is a different brain exercise than the former. Leave space for it. So I see PSA as, it's a relevant, positive, incremental initiatives crowd. Actually, it's booming, like, no doubt. It's booming and it's a booming industry. But all the other little things that we're doing, the retros, all of that, but like, there's a big thing coming. And I don't know what it is, but I definitely believe that the NFT marketplace will be involved, or it's not dead at least, if it's not involved, whatever transformation is talking about. We did the due diligence thing. I got about like 10 more minutes. Let me see if I can get through this. Here's Larry. This is my favorite tweet Larry Cheng has ever tweeted, because as you know, this gives us the plan, the whole rundown. This is very well thought out and basically fully describes GameStop. The ugly teenage phase of profitable growth. This is a phase that companies that were once high growth, high burn companies that are typically transactional go through as they try to get profitable. Phase 1, you start with high revenue growth, high burn rate. Then you realize due to market conditions that you need to get profitable. What were the extenuating market conditions? COVID, right? We need to get profitable ASAP. There's the whole January 28th rally, right? What do? Issue shares, pay off our debts, have a whole rack of cash, right? Okay, phase 2, drive for operating leverage, cut operating expenses, inefficient marketing spend, headcount, etc. All out of focus on enhancing gross margins, pricing, cost of goods sold, shipping, etc. We internalize shipping, all of that. Where else? Operating expenses. Let's take a look. OpEx. Here you go. Q3 from 310 down to 282, and realize that this is because we're closing stores, but we are doing exactly what this states. Q2. 336 to 277. So that's why we look at the margins, right? You want to look at it at all of this as a percentage of revenue, right? Let's see over here, 360 to 295, but he's cutting the operating expenses, cost of goods sold, cost of revenue. Here you go, from 796 to 603. Let's go back to Q2, 857 to 550, and I'm gonna just do Q1, 950 to 637. Cutting down the cost of the revenue. Because I can, what's going down, man? What's up? Yeah, Larry Chang's the man, Larry Chang's the man. Jay, what's up, Thank you. Appreciate it. Ricky B. Loco, welcome, I only got like a few minutes. I got to take my daughter to her practice, but I think I can knock it out. Let's take a look. Let's see. What else do we have? Enhance. Okay, phase 3, renegotiate with vendors. Focus on improving working capital dynamics. Renegotiate with vendors, suppliers, manufacturers to enhance payment terms to improve cash. That's kind of the backside stuff. But improving our cash, we did it. We got that $4.6 billion. They love to make it sound like it's a problem. Like they never mention it or act like it's so easy to get that $4.6 billion. Phase 4, you can clean up the balance sheet, optimize inventory, renegotiate, refinance debt, which we have zero. try and solidify cash, which we have with that 4.6 billion. During these 4 phases, revenue is declining year over year, which the media only focuses on top line revenue. You can see it right here. Revenue declining year over year. Let's do the last Q4 cyclical, whatever. Revenue declining. Okay. I don't have year over year. Where is it? Right here. Let me check over here. Revenue declining year over year. Let's do 2022. 6 million, 5.9, 5.2. Okay, that's the media's whole talking point. Let's go back to the tweet. Where was I? Okay, revenue declining year over year, sometimes materially, because you're comping against prior quarters with heavy marketing spend. And when Ryan Cohen came in, there was basically zero marketing. He just cut it off. What they said to do before in the very beginning, phase 2, inefficient marketing spend. You cut it. And now we'll look, when I read on. Yeah, this is why the ugly teenage phase, it looks ugly if all you're looking at is top line. But there are usually good signs. Marketing and sales efficiency is improving. All OPEX lines are decreasing as a percentage of revenue. EBITDA is growing. Okay. If you look at all of that, I mean, since I'm a little short on time, I'm not going to go through all of that. But look at the gross margin. I mean, it's increasing quarter over quarter. Here, let me move on along. I wish I had time to go through all of it. But here, revenue is declining year over year, but you have achieved a profitability. So what's our profitability looking like, right? What are we going to be looking like when where's the net income? Somewhere over here. Whatever. The net income, the story, the deal. We're going to hit. And when we hit, it's going to hit hard. I don't know why it's not letting me. Net income. There we go. We were 6.7 million, right? Why do I have to look that up? I know it's 7 million. But you think we're going to be 63.1? No, it's going to be 100 million. At least, right? 100 to 150 range. Morantz was saying, what did he say? I forgot today. He said, did he say 110? 150? Something like that? 200? He's bullish. But even if we come in at half, say we come in at 70. What are you going to do? It's exactly what Larry Cheng is describing over here. Your whole bear thesis is completely dead. Here you go. At this phase, you are still ugly to the world because revenue is declining, but the end of the teenage years is on the horizon. Phase 6, maintaining profitability and returning to year-over-year revenue growth by investing some of your own cash flow back into the growth. So, yeah, he's telling you what they're going to do with the cash flow. Back into the growth. We are, the whole Buck the Bunny is coming back. That lets me know. And they have a whole, what am I looking for? And I studied marketing. Oh, God. Audience. It's not even audience, but they have a select audience. They've done their market research on their customer, who they want to target with their target customer, their target base, who they want to target within this. And it looks like it's teenagers. And we really appeal to a lot of people because people like me go in. I like to buy old school stuff. I buy new stuff for my kids, all of that. But they're targeting teenagers with the Buck the Bunny, the marketing campaign, all of that they have. Not Richard Newton, obviously, because he takes offense to Buck the Bunny. But yeah, so they've done all the market research. Trust. But here you go. So they're reinvesting their cash flow back into the growth. They're scaling up marketing costs. This happens typically in 4 steps: sequential quarter-over-quarter gross margin growth, which we have. Sequential quarter-over-quarter revenue growth, which we will have. I mean, I haven't compared quarter for quarter. I haven't looked at it, but just the top line revenue is basically without expenses. So your cost of goods sold matters when you factor it in. Year-over-year gross margin growth, we're going to see it. Year-over-year revenue growth, you are going to see this occur in front of your eyes. This quarter is going to be the first quarter where you see massive growth and continual growth. And from here on out, it will keep coming. And thanks to the interest from that $4.6 billion, who cares if you get it off interest? We got it and we're making money, that just buys us so much time while he's doing this major transformation. I'm going to read this off and then I'm going to need to head out. But I think I kind of got most of it done. Here you go. The revenue growth comes, did I do this? Here. The revenue growth comes from delivering real customer value and then efficient marketing spend, very efficient with what they're doing. Nothing they're doing is costing a lot of money, which I love. But it's being communicated effectively. You see how we're spread throughout all of the Reddit subreddits of TCGs. And what did that cost? Barely anything. Introducing new products, we have a higher quality of collectible products. We're gearing towards collectibles. Expanding new channels, PSA, TCG. We're done this. Retro. Reactivating churned customers. We're bringing more customers in. The same customers. We're doing all of that. The customers that we had before, we have them coming in for retro. We have them coming in for TCGs, Pokemon, all of that. The pricing you saw before. Let's look it up. I mean, PS5 charger near me. Okay. Um, Shopping, right? We'll do it right here. Where is GameStop at? Because when I looked at it here, GameStop $23.99, $24.99 for this thing. The comparable one at Target over here, $30. We're the best price over here. This is a solo one. We are the best price. Micro Center $24.99. All right, cool, but we are competitive pricing if you want to go down the street and pick it up. The same thing with the PS5 charging bases. Defending the base of loyal customers. So, you know what it is. The challenging part of this journey is the ugly period can last a long time. We're 4 years into this, right? This is the whole map laid out in front of you. From phase 1 to phase 5, you don't get much of any credit. It's not until you hit the phase 6 that outsiders will believe in the company again. But those close to the company can watch as each phase is cleared and know that the company is going in the right direction. However, to be fair, until you get to phase 6, you haven't reached the ultimate end goal. For the sake of clarity, this is a general observation across several different companies in different contexts, many of which I'm not involved with. This is not an observation or prediction related to any specific company. Okay, Larry, we know you're talking about GameStop, but yeah, you can see clearly, clear as day. We're in phase 6, at the beginning of phase 6. We've gone through the first 4 years. Ryan actually, like, I would expect this to take a lot longer, but he's such a boss at what he does. He's a beast at what he does. He's such a good business person. He just knows how everything works. What's up? What's up? Okay, I'm gonna be done in like 2 minutes. All right, man. Yeah. So, what am I talking about? Okay, yeah, Ryan's a beast at business. He sped this thing up like twofold. It's not taking plenty of years, and you know, with you can see is in the careers, GameStop careers, how he sped this thing up, and we are just ready to hit that transformational phase because the plan is in effect. Um, okay, I don't even know what's going down there. This is funny, and I only have this open. It's just something because of like Marantz Rantz's private equity angle, and like you can see how this guy, he's a previous employee. I don't know why I took that picture, but he's a prior employee of GameStop, and the way he describes it is when private equity was on the board, and you can see the decisions that they were making and the way they run their businesses. Here, he says, I ran a mall GameStop location for 5 years ago. It was frustrating because my rent was over 10,000 a month, and I had to contend with that expenditure on my profit P&L when other stores had a fraction of that cost. New stores moving into the mall would also move into much larger stores by paying around $2,000. My rent stayed high because my store had been there for 20 years, and we had no leverage to renegotiate the lease, and GameStop didn't even try to speak with Simon Properties about our lease or location. I tried especially hard to move my store to a larger location in 2016 when it flooded, but GameStop insisted on rebuilding the same storefront that had flooded twice before. I mean, they didn't take the right moves to get lower rent, to improve the store, to make it potentially greater margins on their products because it was a planned attack. They were planning to sink the company, by overextending themselves, over leveraging themselves, overextending their footprint, which Ryan Cohen stated in his letter that we need to shrink. Here, I'm looking. This came up now. I haven't even really read it. I was supposed to read it before, but I'm looking for a senior product designer to join our team. We are building the next generation of GameStop and need all hands on deck. If you're interested, send me a DM. So really, that's what I have. I got to bounce right now, guys. But thank you for coming in, all of y'all. Yeah, target audience. Thank you, man. I don't even know. Like, cause I think cause my mind has to like zoom out of here, get out of here. But till then, man, you know what we do. You know what it is. On my last stream, I said I expect to pull back to 28. Where are we at? 27.96. I even said this right here, 25. So we'll see if we go there, if we continue up. But yeah, I'm bullish as ever. We're at phase 6, transformational, technological transformation of GameStop. It's awesome. I love to be here. I'm glad I'm still here, man. I'm glad y'all are still here. Can't stop, won't stop, GameStop, guys. Peace.